All right, good morning, everybody. Today is January 13th, 2026, and the news feeds is showing a massive AI super cycle hitting the real world. So we're not just talking about chat bots anymore. We are seeing AI impact medicine and the power grid in the global trade. So here's a breakdown of the headlines in today's news. So as of today at around 5 o'clock or 5:30 a.m., this is the Fed's power move. So we had got some good buyers or bullish momentum that came into the market, and then it proceed to hit these resistance levels. So these green lines, I was expecting it was going to hit this green line. So this is another resistance level above it. So if we was to go higher, this will be the next resistance level, which means that we will be in a new all-time high. But what happened was that the market had a lot of momentum around 5 o'clock a.m. today, 5:30 a.m. today. And then once we had opened around 6:30, it had gapped down and then it gapped up. And then we finally got a push back down to these levels. So what's happening is that the $4 trillion milestone. So Apple, Google joins the club. So the news is that Apple has become the fourth company ever to hit a $4 trillion valuation. So joining NVIDIA, Microsoft, and Apple. So what this means on a global or macro scale is that this is a economic warfare. It forces countries like China, India, and Turkey to choose between Iranian energy in the US consumer market. So on a micro scale, this could cause sticky inflation. So if a country like India or China gets hit with this tariff tax, the price of electronics, clothes, and even car parts that's sent to the US will go up for us. So the impact is that this isolation of Iran has a risk in a massive trade war that can slow down global growth. So the power grid problem. So too many data centers. So the news is that Americans' biggest power grid operators say they have an AI problem. So because data centers are using too much electricity. So what this means is that AI requires massive brain centers, data centers that eats as much power as small cities. So the US power grid is old and it cannot keep up with the new infrastructures. So the macro scale is that the AI revolution might hit a physical wall, and they saying that we have the software, but we don't have enough electricity to run it all. What this means on a macro scale is that you might see higher electricity bills. So since data centers are willing to pay top dollars for power, they are competing with regular homeowners for the same limited supply. So the impact is that countries will have to choose between green energy goals or AI dominance. So some may restart nuclear plants or keep coal plants open just to keep the AI running. And then we also have healthcare with NVIDIA and Eli Lilly. So that's a $1 billion lab contribution collaboration. So the news is that NVIDIA and Eli Lilly are spending $1 billion to build an AI lab for drug discovery. So what this means is that instead of scientists spending 10 years in a lab mixing chemicals to find a cure, NVIDIA's AI will simulate millions of combinations in weeks to find a new medicine. So on a macro scale, is that this is the shift from generative AI, so writing poems, to physical AI, so making things. So this could make the pharmaceutical industry much more efficient. So what this means on a micro level is that in the next 5 to 10 years, this could mean faster cures for cancer, Alzheimer's, or weight loss with fewer side effects. So the impact is that wealthy countries with AI infrastructures will likely control the next generation of life-saving medicine, widening the gap with developing nations. Look, it's going up. I cannot stand sitting on my hand, and it's going up. The wheel rate is going up. You have to be very disciplined because you cannot time the market. Is it can be predictable in a way, but it's unpredictable. So you cannot always be right, and you don't want to always be right. You want to learn how to manage your and be a good steward over your capital. So we're risk managers, knowing how to get in trade, and we're managing those trades. So what's going on is how it affects you. So the issue is that the $4 trillion alphabet, Google. So they're building better AI tools on your phone. The market is concentrating and focusing on big techs, the Iran tariffs, so higher prices for imported goods, risk of a global trade shutdown. And then we also got the grid crisis. So there's a possibility of higher power bills like blackouts, massive investment needed in energy. We had the AI drug lab, so faster access to new medical cares. Healthcare is becoming a tech-driven industry. That's what's going on. Yeah, we just have to understand that these four or these magnificent seven are keeping the Nasdaq 100 up and the S&P 500 up, and the market is top heavy. So it is signaling that the AI boom is consolidating power into a few mega cap companies, and the stock market is becoming top heavy, meaning a tiny number of companies is driving almost all the growth in the United States GDP. So these companies are now so massive that they may face more intense government investigation into whether they have became monopoly. And then the trade war of the 25% Iran partner tariff. So United States is telling the world, if you buy oil from or sell goods to Iran, we will tax everything you sell to us by an extra 25%. So what this means on a bigger scale is that this might cause an economic warfare. So this is intending to isolate Iran. So it's forcing countries like China, India, and Turkey to choose between Iranian energy and the US consumer market. So on the street level view, so this can cause inflation. So if a country like India get hits with this tax, the price of electronics, clothes, and car parts that they send to us will go up. So the impact is that China, Iran, biggest trading partner, can see its total tariffs to the United States to jump to a minimum of 45%. And then we're talking about the power grid crisis, AI versus your light bill. So America's biggest power grid operators say that they have an AI problem because data centers are using too much electricity. So what this means for you is that you might see higher electricity bills since data centers are willing to pay top dollars for power, and they are competing with regular homeowners and for the same limited supply. So the impact utilities are legally obligated to bail out infrastructures, but if these data centers aren't actually built, regular citizens may end up paying for that unused infrastructures through higher rates. And then also with the politics and the interest rate cap, the Jerome Powell probe. So the Powell's probe is Republican Senator Tom Tillis, and Lisa has criticized the Department of Justice criminal investigation into Fair Chair Jerome Powell, calling it an attempt at coercion. So another thing is that credit card rates cap. So President Donald Trump has called for a 1-year 10% cap on credit card interest rates. So this caused stocks for Capital One and American Express to plummet because it would make many of their products unprofitable. They have a 10% cap. So your wallet, so while a 10% cap can or could save you money on interest, banks warn that they might respond by canceling rewards programs or refusing to lend to people with lower credit scores. So the market sentiment is nervous bullishness. So despite hitting fresh record highs on Monday, the market is currently shaking off significant political and legal headwinds. So the sentiment is fragile, balancing strong corporate momentum in tech and retail against a rare direct conflict between the White House and the Federal Reserve. So we can see as of today, the CPI was released, and what it says that the market expect the headline inflation to remain a steady of at 2.7%. 0.7% will likely supercharge the NASDAQ 100 by reinforcing hopes for interest rates cuts. If inflation sticks or rises, the US dollar will likely spike and the stocks will see a rapid sell-off as traders price in a higher for longer interest rate environment. So the Powell probe drama. So the Department of Justice had raised serious concerns about the central bank's independence, and this had added a risk premium to the market, evidenced by gold hitting an all-time record high of $4,600 per ounce on Monday as investors sought safety. The credit card rate gap, so proposal is that President Trump floating of a 10% cap on credit cards interest rate had severely weakened the financial sector. So Capital One fell over 6%, American Express fell over 4% yesterday on Monday, which could act as an anchor on the S&P 500 as of today. So the projected performance of the NASDAQ 100 is likely to outperform the S&P 500 if the CPI is favorable. So strong tailwinds from Apple/Google AI partnership and Walmart's inclusion in the index beginning of January 20th. That's what's causing the NASDAQ to go up. And then also just all of the bullish headlines on AI. So we've seen the volatility open up around 6:30. So this is the New York stock market opening. So we've seen that we had a gap up. So the market shot up and then it shot back down. But we can see that around 5:30 a.m. and we're on the West Coast, the CPI was released. And this happened before the New York stock market opened. So it caused the market to go up and then to come down a little bit and then consolidate for about almost an hour until volatility came back into the market and it went down. And then as of right now, this is a support level. So we don't know if the market gonna bounce off this level and then shoot back up to this level right here or to these all-time highs. So this is a breadth or concentration. So watch if the rotation into other sectors continue, because if traders flee these other sectors, they going back to the Magnificent Seven for safety, or they going to other places to hedge their dollars. And then watch out for the dollar DXY. So if the dollar breaks above 158 versus the yen, it will likely signal a bad day for equities. So we're gonna wrap this up, but we still got nervousness in the market, and what goes up must come down. But what they say, buy the dip or sell the rip, right? So the NASDAQ 100 and the S&P 500 performance outlook. So as of today, this morning, the overall feel of the market is cautiously bullish, while futures were slightly down, while we're slightly down before the as expected data has set the stage for the positive opening. So disclaimer, this video is for educational purpose only. The content provided is based on current market research and condition and my research as a scout in my briefing. So this is not financial advice. Please consult with a licensed professional to discuss your specific financial situation and long-term goals, because every individual and family financial situation is different. So if you like the video, please like, comment, subscribe, and then also go into my description if you want a Q&A or a one-on-one consultation. But that's it for me, and I'm done for today.